Boom. Good morning, everybody. Happy, what day is today? Thursday? Yeah, Thursday. Welcome to the morning show here on Stock Market TV. Friends Israel, JC Parets, Steve Strazza, Alfonso DePalbus with you this morning. What are we talking about? Great guest on the show today, by the way. Larry McDonald. Love having Larry on the show. He was just hanging out with JC in Toronto. So we'll get Larry's perspective on what they got up to when they were hanging out like a month ago or whatever. What's on my radar? I mean, NVIDIA, great day yesterday. Space stocks all trading higher this morning after that spacewalk. I don't know if you guys saw that this morning. Pretty wild stuff. We got ECB raising their rates again. So markets reacting to that, but I guess not. Mostly green. So yeah, that's what I got on my radar this morning. What up, chat? Good morning. Jobs data. That's true. It's Thursday. We get ADP. Don't really care about that. Kenneth Kyle will take a nothing burger. Speaking of burgers, rest in peace, Burger Fi shareholders. I don't know if you guys have ever been there, but the old Chapter 11 trick for them. Anyway, let's bring Steve and JC on, and yeah, here we go.
Oh, ladies and gentlemen, we are back in the flesh. Your Miami Dolphins play this evening. Your NFL's leading passer, one Tua Tagovailoa, will be playing football this evening. How do you guys feel about that? How do you feel?
They're playing Buffalo?
They are, indeed.
All right.
What's the over-under on how many interceptions this guy, what's this guy? Josh
Tua?
Smith? What's his name?
Hmm.
I don't know. I'm looking forward to it. We got so much going on today that, like, the fact that this game starts at 8:20, you know, an older version of me, this would be the most important thing in my life going on right now. I would not be able to concentrate until the game started, but we got so much going on tonight. Big live stream today at 4:00. Those interested in, wondering what the market is doing, come join us. Spencer Israel, if you'd like to drop a link.
I most certainly will. By the way, this link, if you're on YouTube, the link is at the very top of the description. It's that very first link right there. I'll drop in chat right now, regardless, for y'all. There it is. Today at 4:00. JC doing just a bit of a more elongated, more elaborate state of the markets, right?
Yeah, and we get going at 4:00 live. We got a lot to talk about, so be there. Don't be late. Don't be late. Shall we?
Yeah, sure. Okay.
Sure. All right, ladies and gentlemen, we have fake news on the chat this morning, talking about the Bills at -2.5. That is incorrect. It's actually Miami -1. The Dolphins are favored. Brian, check your data. Fake news, folks. Don't be alarmed. Back to the markets. We've got the Dow futures up 50 points this morning, just under 41,000 for the Dow Jones Industrial Average. S&P futures flat, 55.66. Wow, look at that S&P. NASDAQ 100 flat on the day, 19,273. Big day yesterday. Bond futures are flat, just under 127 for the 30-year. You got crude oil up 1% this morning, 68. Copper up almost 2%, back above that 420 level. Gold up almost 0.5%, 25.5. Again, really been consistent there, range bound for gold. Silver 29 and change, up almost a full percent, with the volatility index back down to 17. Over in funny money land, you got Bitcoin 57,800, up almost 1% on the day. Ethereum up 1/3%, 23.50 for Ethereum. Solana 135, up 1.5%. Binance up 2.5%, 544. Finally inching higher. Total crypto market cap, Spencer Israel, 1.98 trillion, just under 2 trillion market cap, with the Bitcoin dominance still around 57.5. How do we feel about this morning's futures, my friends?
I like green more than red. So
do you? Why?
Yeah.
Why?
Why? Is that what you said?
Yeah.
Don't explain it to him. I can't do this. Nothing's going on here.
All right. So on Monday, so Tuesday morning, Strazza says that he was not excited about the bounce in the market yet.
Yeah.
Yesterday, after a second consecutive update for the market, still not excited about the move for the market. Let's update that. It is now Thursday morning. We have 3 days in the book. So far, the NASDAQ 100 is up 4.5% for the week. The S&P 500 is up 2.6% for the week. The Dow Jones Industrial Average only up 1.3% for the week. Transports up less than 1% for the week. Small caps up 0.5% for the week. So it really is is all about the NASDAQ and the S&P 500 and that tech bounce that we've had this week. Technology is actually up almost 7% just in the first 3 days of the week. So Strazza, you said yesterday, you'll know it when you see it.
Yeah.
Have you seen it?
Did you pay attention to the tape yesterday? Do you know what happened?
Oh,
It's kind of a big deal. Did you see what they tried to do? They tested the lows from Friday. So now this corrective wave low. And then I don't know what happened at 11 o'clock yesterday, but the index has rallied 1-2% right off of those lows and closed at the highs. So yesterday's price action was excellent. And the best part about it was just look at your speculative tech watch lists. Look through all the ARC components. Those were your leaders yesterday. I think that's a big positive because it's going to be hard to count on the Mag 7s and the semiconductors to be your leaders again, I think.
So you said yesterday, and I quote, "I'll know it when I see it." It sounds to me like you saw it.
No, I mean, so I've been saying it's the VWAP from the August 5th lows, and we're above there. So while I think we're probably headed back below, and I thought that yesterday, they tried and failed. The bears tried to take control yesterday and send prices lower, right? They made a new low the past couple of sessions, and then they hooked it higher. So that was positive. That was very constructive. Love to see it. I bought some Lamb Research. I bought some Google, both at the prior cycle highs.
Some natural gas, some Verizon. Right?
I bought Boyle too to juice that trade up.
So I've got something that I'd like to share here. So the big thing here has been about tech. We had our team meeting yesterday, and basically we were laying out, listen, if this is a major top for technology, if these semiconductor tops complete, Microsoft is a massive top, Nvidia is a massive top, that's the end of the bull market. Right? That's it. And if you flip that on its head, if you believe that the bull market is not over, you believe that we are somewhere in the middle, maybe closer to the beginning, maybe closer to the end, but somewhere closer to the middle, and this is not over. If you reverse engineer that premise, then by definition, you need to see rotation into technology and semiconductors, and you're going to get another rip higher. So if you do think that this is the end of the market, you're looking for confirmation from these tech stocks. If you don't think that this is it, you step in here and you buy them. Look at slide 4, please, if you will, Mr. Spencer Israel. So this is a big one. I think this tells a really interesting story. When you look at semiconductors relative to the S&P 500, very similar, broke down, rallied back. From failed moves come fast moves in the opposite direction, particularly when you have momentum diverging positively like this. Momentum was not even able to get oversold on this last dip. Technology relative to the rest of the market. This is a little scoop and score. Strazza, is this one of your favorites?
Yeah, you could call it that.
Yeah,
sure. And then I think equally important is all of those spooky defensive relative trends failed and fell back below their pivot highs yesterday. So it was a very, very risk on tape.
I like what the chat here, Spencer, is talking about. We are in a dolphin market. I would agree with that because they tried to knock them down and they said, right? And they ripped them higher, right? You like those animal noises? I've been working on them. I get a lot of practice around here with three kids.
That's great.
Pretty good, right? Pretty good, not bad.
Yeah, I hope I never hear it again, but it was pretty good.
The old nutty dolphin.
No, I know what it is. I like their old logo so much more than their new logo. I was looking through gear, and what they did the same thing as UConn, and it really disappoints me. UConn had this beautiful old cuddly husky, and then they turned it into this like mean rabid looking wolf. Is the new logo, like the new husky face. Dolphins did the same thing. Your new dolphin is mean. The old one was cool. He had a football helmet on, like looked so chill. Like that's the kind of dolphin you want to swim with. This one, I wouldn't get in the water with this new dolphin. So
Yeah.
I like the old logo.
It's interesting. People from Buffalo are just so dumb. They're always talking about the fish and the fish. I don't know if they have science class or school at all in Buffalo, but the dolphins are mammals. You see, they're not fish. So you'll see tonight, like all these like crazy Buffalo fans, like talking about fish and stuff. They're very, very confused. People very confused.
Listen, XLF and XLI. Talk about exploring a breakdown yesterday. The price action the first 2 hours of trading, or hour and a half, was nasty, right? They were trying to sell these things. We had giant red candles. Go look at the candle in XLF or XLI, right? And imagine what that would have looked like if it was full at the bottom of the wick. That's what it looked like at 10:30 yesterday, right? The bulls came out and made a huge save. I think XLF, that level's 44, the pivot highs from July. And then XLI, you could draw a really clean shelf of former resistance right around 126.50, 126 and change. Both of those levels tested and held. Also for XLI, it's that VWAP from the August 5th low. Another way that we could tell, well, XLI tested the VWAP from the August 5th low. Another way we could tell that the financials are such leaders, they never even retested the VWAP from the low. They haven't come close. Only group.
Can you throw up slide 2, please, Mr. Israel? Strazza's making a couple of interesting points talking about candlesticks. How a candlestick that didn't close till 4 at 10:30 looked one way, right? And it gets back to don't overthink incomplete candlesticks, right? One, Charles Henry Dow, a journalist from Springfield, Massachusetts.
Yeah, well,
he taught us in the 1880s, and not to be confused with Springfield, Ohio, very different. Charlie Dow was not eating his pets. Charlie Dow said that closing prices are the most important prices. Strazza, are you going to argue with the one Charles Henry Dow?
I don't need to argue with that. But I'm going to zoom in on some of these charts.
How do you feel about I'm told tech stocks aren't working. And I wonder maybe your tech stocks aren't working, but there are certainly tech stocks working.
A lot of tech stocks did stop working.
So IoT clearly didn't get the memo.
Nobody knows.
Do we call that relative strength, Strazza?
No one talks about IoT in the wild. Unfortunately, I love IoT. I'm long IoT.
Well, those people clearly those people
are. This is a $25 billion company. You might as well be zero.
Wow,
ooh, see what he did there? I love it.
Spencer Israel been hanging out with JC too long. That's the
best thing you've said in a while, Spencer.
Yeah.
Really
your sarcasm is duly noted, my friend.
All right.
Duly noted, my friend. All right, one for Spencer Israel. All right, now let's rewind. Let's rewind. Because once you're above $30 billion, you are no longer part of the 2 to 100 club. So we are only looking at stocks that are below 30 billion. This one barely makes the cut at 25.
Okay, just to be clear, we talk about all this stuff. We're looking at all the stocks. Like the universes are fun, but we're looking at everything. There's nothing I'm not looking at least on a weekly basis. Okay, so like it's not. We never worry about missing stuff. I hate how you paint it that way. Nothing is missed. Doesn't matter if there's.
I said I painted. How did I paint it?
Huh?
How did I paint it? Me paint it?
Like, oh, we're gonna miss it if it's not on our list anymore. We're still gonna see it. It just won't be written about.
No. Just to double click on that, Strazza, we over the years have gone out of our way to fill in holes in places due to that fear of missing. Like, we can't miss this. We have to, right? We have done a great job of finding, right? Filling those holes.
Yes, but another scan that we never talk about because it's not something that would ever be published is simply looking at all of the U.S. listed stocks of all market caps and looking for new highs, relative strength over different time frames. Like, we're literally doing that all day, every day, where we're not narrowing down our universes. So there's some crappy stuff or some, speculative stocks that maybe don't meet the filter criteria for some of these other universes. It's not like we're not seeing those charts. I was just trying to clarify.
I've got a good one for you,
Very
Strazza.
important.
Spencer Israel, my good man, if you will. Slide 3, please. So there's this, right? There's this. The negative implications of something like this are not below my line. What about the implications of an ultimate breakout here? As we know, semiconductors have already taken out their March 2000 highs. Technology's right here. How do you think about this, Strazza? Like, just when it's just you alone with a glass of cheap Cabernet late at night, it's just you, and you're thinking about tech on a relative basis. Like, how are you thinking about this?
I think it can go both directions and probably doesn't go sideways. I think of two future scenarios when we look back at this bull run. It was the great AI fake out, and everybody got excited about the AI trade, and then it fell on its face because it was really just one company making money off of AI at that moment, right? So I could see that happening. And in that case, I think this ratio reverses.
What was the one company?
NVIDIA.
Oh.
So I could see that, right? This kind of bubble just pops right here, and that was the end. I could also see a situation where this just blows right through, and the AI revolution was so real, and this is an extended bull cycle, right? And there's another 3, 4, 5 years left of it. I could see that too.
Because we got here in January, Strazza.
The valuations aren't crazy, but I also think not enough companies are actually making money.
Did you just say valuations? I think I just threw up in my mouth.
Yeah, because it matters when you're talking about stuff like this.
Does
You
it?
need a runway from a valuation standpoint. You need a runway.
Yeah, I think you get what you pay for in life, and you want to buy cheap shit, you're gonna get poor quality.
Yeah, sure.
I think you got to pay up for the good stuff.
Listen, Larry McDonald would love to talk to you about valuations when he's on.
Do you go out and buy the cheap caviar?
Never.
Do you go to the all-you-can-eat sushi place, or do you go get some of the good stuff?
I buy the cheap call options sometimes, though.
You get what you pay for in life, Spencer Israel.
There's a time and a place for all you can eat sushi.
I like trading calls on like $10 stocks.
Yeah, that $2 sake is going to make you feel great the next day. Just as a reminder, technology got back to the 2000 highs relative to the S&P last football season.
I've walked out of a sushi restaurant before. Ask Sean. Not eating
last football season.
What?
Do you understand the words that are coming out of my mouth?
What?
They got here in January. It is now September. What is that? 8 months? No?
What?
8 months?
Yeah, it's been a while. A lot of stuff has been sideways for 8 months. When you zoom out on the chart like this, it doesn't do it justice.
So throw back the short-term one there, Spencer, slide 4. This is big, man. This is like, I don't know, the most important thing in the world right now.
Look, if you look at charts like the ones I was buying yesterday, which I'm marking up now, we could talk about like Google and.
I wanted to put a risk reversal on semiconductors, and you guys crucified me.
Yeah, you don't do that here. That's. See, listen.
Well, it would have worked out pretty damn well. Now, wouldn't it?
No, here you don't do this. We don't do things that can risk blowing up our accounts or
okay,
risk.
But what if we would have bought? What if we would have bought out of the money puts and hedged that out?
No, because then you're just trying to do too much. It wouldn't work. We've talked about it. If you're going to sell puts in a semiconductor stock in an environment where semiconductors are down 6, 7, 8% like every other week, dude, you can get blown out of that trade and absolutely crushed. It could ruin your week. It could ruin your month.
Just as a reminder,
ruin your year.
Just as a friendly reminder to everybody out there in internet land, semiconductors at the index level have tripled this bull market.
Yeah, now you want to sell.
NVIDIA is up like 750%. So these consolidations, these corrections, well deserved, are they not? Well deserved.
The time to sell puts, my friends, has passed. It will come again, but for now, the moment is gone. It was lovely. It was fun. We sold so many puts this year. It was fantastic. We're not selling more.
Hold on. Speaking of boomer alert, why don't you tell the folks about your Verizon?
About Verizon, what?
Oh.
I don't really want to talk about it publicly because I'm ashamed of myself. I have talked more shit about this company than probably any company.
Yeah, I don't know. You talk a lot of shit about gold mining stocks. You bought those too, so I don't know.
Listen. I'm not here to be right. I never was, and I never will be. This looks too good,
Dude,
and I've been
that.
telling you, I'm here for the yield right now.
If Steve Strazza comes at me buying airlines, I'm out of here. That's it. I give up. I retire. That's it. Mission accomplished. Right.
I feel like my dad out here.
One.
I'm just snatching up dividend stocks like left and right. This one is just too good. A chart like this, paying you that kind of money. Let's go.
Dude, Strazza's going to come in hot on Monday being like, yo, I just bought some of that United Airlines, bro.
Listen, no, that's not going to happen. Yeah, I'll tell you what else. Listen, I'm still buying things, right? I come out and I say all these things. I'm still buying things. I do better if I'm wrong. I think maybe this is the end of the bull market. We'll see. Yesterday was huge. Yesterday was great development for the bulls. But I'm positioned in a way where I'm going to do better if I'm wrong about that, right? I'm still very long. I was buying Aave. I'm still buying cryptocurrencies, buying Lam Research. If you look at some of these AI leaders or even like the semiconductor names, they have come all the way back to some major levels, right? So what do you do not knowing what the future will bring? You have a major level like in Lam Research back at those power cycle highs. You just buy it. And if you're wrong, if you bought it right there, what do you lose $3, $4, $5 on a $700 stock? If you buy it right at that risk level, right? So there's really not much downside to being wrong and taking a shot. So that's what I think you do in these environments. You find really well-defined risk setups and old leaders, and then you take some shots, right? Selectively. But you keep it really tight. And if the market reverses against us today, then you're out of that trade. And if it doesn't, and we're off to the races, and JC's little scoop and score in the XLK SPY is real, and we see follow through to the upside, then you're going to be like, yeah, I'm so glad I bought Lam Research and Google on these major sell-offs at these prior cycle highs.
I got one more. We got Kenny in the house today, Spencer?
Yeah, he'll be around. He'll be back tomorrow.
Oh, okay, great. Look at, speaking of scoop and score, I think this takes this whole conversation about technology and takes it to a whole nother level, right? Technology is a third of the S&P 500. It's half the NASDAQ. If these are massive tops in Microsoft, the biggest company in the world, in NVIDIA, if these are massive tops in those types of companies, it's over. The bull market is over. Now, that's not the bet that I'm making. A lot of people are making that bet, which we love. We want everybody to get their faces ripped off because they're shorting bull markets. We love that, right? Well-deserved punch in the face for people shorting in the bull markets. Like that is a classic characteristic of the types of things that you see in healthy environments, right? And I think we're seeing that. This chart takes everything that we've said so far this morning to another level. Because when you look at what's inside the high beta index, we're looking at the S&P 500 high beta stocks versus the S&P 500 low volatility stocks. High beta is half tech and another 17% consumer discretionary. So you're looking at over 2/3 of the entire high beta index, tech and consumer discretionary, right? So think Amazon, think Tesla, think Home Depot, Lowe's, Apple, Microsoft, NVIDIA. These are the companies that are driving that high beta. And we looked at that scoop and score in semiconductors on a relative basis. We looked at the scoop and score on technology on a relative basis. Now we're looking at high beta relative to low volatility. Strazza, it's the same thing, maybe even more obnoxious because you're adding that discretionary kicker. On the low volatility side, you got a ton of staples. You got a ton of financials. You got a ton of industrials, right? You don't have any of that stuff in the high beta side. So just understand the difference. And in healthy market environments, you tend to see high beta stocks outperforming low volatility, which we have not seen since technology peaked on a relative basis in January. Like I said, last football season, 8 months ago. And now here we are again. Is this not the most important thing in the world right now?
These are either tops or fail tops at this point, right? So I think you're going to get moving in one direction or the other. I don't think that's going to chop sideways. This thing's been sideways all year up until just a couple months ago. So I think this is like decision time. but it certainly looks like lower. I mean, look, listen, we can mark stuff up like this, but when we do, it is the lower probability outcome. The higher probability outcome at this point is that the trend continues in the direction of the short-term trend, which is now lower.
So then you think that technology rolls over, semiconductors roll over, consumer discretionaries roll over, high beta in general rolls over, and the market falls apart?
Listen, I could tell you what I think. It's fun to talk about what we think.
I want to know what you think. I'm asking
you. Buying and selling things based on what I think, right?
I'm just wondering what you think is going to happen. That's all.
Honestly, I think tech stocks have more left in the tank. I've been really surprised by the nasty price action.
Have you? Semiconductors tripled this bull market. They gave back 20% of that. Is that really that much?
Yeah, the downside momentum was alarming.
Was it? They never even got oversold.
Dude, we hadn't seen clusters of days like that since the financial crisis or the .com.
Semiconductors never got oversold, Strazza.
I'm talking about the down days. That's fine.
Well, I'm just saying, like, if things were so bad, right? If things were so bad, I'm not saying you specifically, just in general, just thinking about it. If things were so bad, wouldn't we have seen some oversold conditions in semis?
We did see oversold conditions.
We did not.
I'm an equal
SMH? In the SMH?
XSD. Oversold.
Oh, here we go. Now we're looking at the equally weighted semiconductors. How convenient. How convenient, Mr. Strazza.
Listen.
So now all of a sudden, semiconductors live in an equally weighted world. You don't have the winners dominating that space like at all.
Dude, I'm just trying to analyze a group in a fair way.
Oh, and looking at semis on an equally weighted basis is the most fair way. You can't even fucking say that with a straight face.
I want to know what most of them are doing. I don't want to know what 3 of them are doing. I can look at their charts individually.
When I bring the equally weighted gangster charts, I get hated on. Now look at this guy. Look at this guy with his equally weighted semis of all things.
A lot of these semiconductor charts that have already completed tops need to undo those tops. And that's really what I'm looking for. I have them all flagged, and I can go down and read you the ones that have completed tops versus the ones that have not. I have it all marked up on my watch list right here. ASML's trying this morning to undo its top. AMD.
Spencer Israel, throw up slide 2, please.
Lam Research is trying.
I like what people say in the chat. Slide 2 is definitely one of the stars of the show.
Applied Materials, Micron. Also, Intel is not cheap by valuation standards. I saw something in the chat. You got to be careful with that. If a company has a low PE, it doesn't mean it's good from a valuation standpoint. It's got to be growing, right? Intel hasn't been growing for I don't know how long now, but it's a long time, right? So look at like the PEG, never just the PE. Don't stop with earnings. Always find a way to incorporate growth to your valuation metric. Otherwise, it's a waste of time because cheap stocks that aren't growing just get cheaper until they go to zero.
Yeah, people treat PE like it's like the law of the land. It's kind of bizarre. I get it because it's like simple to understand, but like PE is not the law, man. Like,
what kind of serial killer is going to dilute something as pure and factual as price with something as arbitrary and irrelevant as an earnings estimate?
Well, when you're in business, you got to make money, right? So earnings, the E is really important.
Yeah, but we don't work for Broadcom.
I don't want to work. Well, you don't want to work for a company that doesn't have an E, though.
For the record, as a founder of multiple companies, my fundamental analysis is on point. You want to talk about operating leverage? Give it to me. You want to talk about margin expansion? Let's fucking go. You know what I'm saying? Like you want to do this? You want to talk about accrual accounting and how much I hate it? We can do that.
You don't know what it is.
I hate it so much. It makes me so angry. Yeah. Accrual accounting is literally it's.
I know. You love to say the word. I'll bet you couldn't explain it to a 2-year-old.
Of course I could. But we live in a cash world. Cash rules everything around me.
That's how he explains it. Cash is king.
It is. We live in a cash world. Cash accounting. Fuckheads. Like, I understand the FASB and the GAAP and, the Big Four and da-da-da. I get it. The SEC and all that stuff. Great.
I just before we move on here, did Shannon Sharp really make a sex tape?
No.
No.
He was live streaming and he left
technically,
it down, so it's just the audio.
Sort of. He was accidentally streaming. It's the whole thing.
Okay.
Can we bring on our guest today, Larry McDonald?
I can just imagine this like roided up like horse, just like going crazy.
Okay.
Like,
I don't want to, Matt.
I don't want to listen to that.
Okay. I'm bringing Larry on.
All right.
Dear Lord.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Larry McDonald in the house.
So my intro is the Shannon Sharp horse.
I'm sorry. I apologize on behalf of him. That person.
Ladies and gentlemen, Larry McDonald coming in. Larry, you know, a lot of years on Wall Street. I can't imagine this is the first time you hear such things.
Oh God, no, that's just a normal day on the trading floor.
This is PG. This is PG stuff, Larry.
Yeah,
yeah.
Well, and that's what's great about this show. You know, you bring this. It's kind of like being on the floor and bringing people behind the scenes.
That's right, breaking balls. You know, standard operating procedure. And those who can't handle it, like the Karens of the world, they can just go away. See ya. Nobody will miss you. Bye, Felicia. I just want to give a big shout out to Larry McDonald for a couple of things. Number one, Larry McDonald looking fit, looking jacked. Right, Larry's guns. Larry looking good, buddy.
You know, I've got a 10-year-old and a 9-year-old, so I'm
show the guns. Show the guns, Larry. Show them off.
The guns. I've got a 10-year-old and a 9-year-old, so I'm 58 going on 38. So.
Dude, you look great, Larry. Big shout out to Larry. Also, Toronto. I wouldn't have been up there in Toronto if it wasn't for Larry being like, JC, come meet me in Toronto. Flip the book. Flip. Can we get a flip mode?
Here we go.
No.
It's a setting on the video, but it's how to listen when markets speak. That's what it says.
How to listen when the markets speak. Larry's new book got me up to Toronto. Everybody buy it. Listen, Larry McDonald. Before we were friends, you know, I was a Larry McDonald fanboy. Right? I mean, I remember being in Fiji, laying on a hammock, reading "Colossal Failure of Common Sense." This is true story. Laying on a hammock in Fiji. This is 2009, right? 2009? Yeah, 2009, summer of 09. I had traded that environment that Larry was wrote about in the book. So the book is about, you know, the collapse of Lehman Brothers being told by a bond trader inside of Lehman Brothers. That particular bond trader happens to be a one, Lawrence McDonald. And later on, we became friends because we have a lot of mutual friends and everything. And he just dropped another book, How to Listen When the Market Speaks.
Yeah, it's doing great. It's been in the top 10 on Amazon, you know, in the financial categories. And it just, you know, it's about life, right? It's about you can get everything in life that you want if you just help enough other people get what they want. And so after the first book came out, I did 140 speeches in 16 countries. And the secret is you make about 10 times more on the speaking tour than you do actually with the book, right? That's how it works behind the scenes. But the best part is meeting people like you, meeting professional investors around the world. And so what I did was I collected kind of I think the most impressive lessons of the last decade of meeting with, you know, the Brevin Howers of the world, David Einhorn's in the book, Charlie Munger. I sat down with him. I sat down with David Tepper from Appaloosa. And it's a kind of a really cool, really for any kind of investor that's learning the market, it's a must read. How to Listen When Markets Speak on Amazon. Thank you so much.
And I appreciate you being here, Larry. We'll drop the link in the show notes. Everybody, get your hands on the book. Did you do an audio version, Larry?
Yes. James Robinson did the audio, did a great job.
You didn't even read it? You didn't read it, Larry?
No. I'm not good at that. I mean, that's a tough job, man. You know, to do the audio, you go in a studio and they critique you hundreds and hundreds of times. And
I'm like halfway done with Josh Brown's book that he just dropped, and I have like this Long Island, like obnoxious voice, like in my ear, like it's, you know.
Oh, he did his own audio. Good for him.
He did his own.
Wow.
He did his own, and his like, you know, his ups and downs, like it's Josh literally reading a book to you. I mean,
that's nice.
It's pretty funny. It's pretty funny. When I write my book eventually, I wonder if I'm going to read it or not. I think the last thing people want to do is listen to me for 8 hours. So we'll see what happens. Larry, let's talk markets. All right. First of all, if you don't buy Larry's book, your life has gone horribly wrong. So let's get that done. We'll give you a second. Go press buy on Amazon. Larry, you know, I got people telling me that the bull market is over. that this tech bubble is ready to burst. This unsustainable, unprecedented appreciation in the value of equities is just not able to continue. It has to come to an end, and it's going to come to an end any day now. But I'm just not seeing really any evidence at all that suggests that that is the case. Quite the opposite, in fact. We're buying stocks very aggressively. How do you feel about all that? Are you in the camp that the world is on the precipice of complete collapse, and the house of cards is all about to come tumbling down, or you think this is just a normal, average, everyday bull market?
Well, let's look at some interesting opportunities. So the streets. This is why people need all-star charts. They need the hedge eyes of the world. They need the all-star. People need what I'm about to say is going to shock you, right? So the street has a 12-month price target of $160. This is like 40 analysts on Micron. $160, right? 106, and the stock hit an all-time high around 160 within the last 3 months. Now, and JC, you're the charts guy. I've never seen a stock go from an all-time high with all that kind of, those buy recommendations. Literally, like every analyst on the street was upping the price target, 120, 130, 140, 150, 160, all summer long, right? The stock's trading at 86. Right near, well, pretty close to, not on, but the 200-week moving average. Now think about, explain to the audience what a 200-week moving average is. Like that is the average of 200 weeks. I mean, it's trading right near there. So
4-year cycle, 200 weeks, 4-year cycle.
Think about it. So if you think that this is overdone, and the Nvidias of the world are 30% off the lows, right? 30% off the August 5th lows this morning, Nvidia. You have to start looking at some of these value. I think Nvidia. I think Micron's trading like 5 times EBITDA, right? So, and its free cash flow yields like ripping higher, and the street has a 160 price target, and the stock is $85.
So what does that mean?
Well, first of all, what I like to do, it's like Buffett with, say, Oxy. What we like to do at the Bear Trap Support is look when you consider some smart people. There's some smart people. There's some dumb people on Wall Street. Buffett's no dummy, right? Oxy, the XLP right now is trading very close to its 200-week moving average, right? That's another one that's on the 200-week, very close to it. Oxy, which Buffett it's been buying, is trading, I think, pretty much below where Buffett's cost base is, right?
Yeah. So
within the market, there's some. I think that the new lows on the energy stocks. Now we're supposed to be in this, we're supposed to be in a Goldilocks, right? Well, that's the sales pitch, right? We're in a Goldilocks economy. Then
can you explain to us, tourist economists, what a Goldilocks is?
Well, it just means a no hard landing, a soft landing with a potential growth revival, right? So why are like 45% of the energy stocks on I think new lows, right? And it's equivalent to like the 2020 levels. So something's going on, right? So if you're here's my point. If you're positive on the market, and the economy, you think that everything's going to be okay, then for God's sakes, you can buy some of these names on the 200-week moving average. They're down. Look at the XLP. Look at Micron. And then if we're wrong, if we go into a hard landing, these things have already been destroyed, right? So you're buying stuff that's 30, 40, 50. I think Micron's 50% off, right?
50% just got cut in half.
Yeah. So okay, soft landing. AI, sexy stuff. That's what I like. If you're wrong, okay, maybe you have $10, $20 a downside on Micron, maybe 10, right? But you can accumulate it into that and then have a nice, 3 to 4 year position. But something's going on in the market where, okay, there's some parts of the market that have been absolutely destroyed, and there's parts in the market that just keep, moving higher.
Larry, let me ask you this. You got your ear to the ground, and you talk to a lot of people that I don't speak to. You're talking to people in places that I don't go to or speak to too many people down there. You live in Panama. Is that technically Latin America? Yeah, right?
Yeah.
Technically. It's like, it's kind of like the Notre Dame of Latin America, but yeah, all right. And when you talk about AI and you talk about the beneficiaries of that, obviously like semiconductors, technology companies, internet companies and stuff like that, come to mind. But when I speak to people like in the Midwest, some of these like industrial machinery folks and engineering folks, I'm hearing a lot of chatter about AI helping, particularly in the logistics side and in the engineering side and things like that. In the conversations that you're having with people in Asia, in Latin America, in Europe, what kind of chatter are you hearing about AI impacting other industries outside of traditional tech?
Okay, exactly. And in the 90s, I was very fortunate. We sold our website, convertbond.com, to Morgan Stanley. And I lived through this where everybody was looking at Global Crossing. Everybody's looking at JDS Unifades. But nobody was looking at Match.com, right? Nobody was looking at the next Googles, the next Facebook. Everybody was looking at kind of like the infrastructure of the new industrial revolution. And that was the 90s. That's what I lived through. So I'm jaded, I would admit. But I see the same thing today. Everybody's looking at the NVIDIAs of the world, but nobody's looking at new scale. So SMR, equity. If here's the one thing I guarantee you, right, from just political sustainability reasons, these data centers are sucking in so much energy from these counties in America. So think about counties across Virginia, where it's a major hotspot. Just outside of Atlanta, you've got a lot of these data centers that are coming on. If you listen to Larry Ellison, his CapEx train on this data center thing, it's just like, it's 5 standard deviations greater than anybody thought 3 years ago. And so if that happens, you're going to need local energy sources, small nuclear capacity in underground, in a safe location, but it has to be like, in other words, these data centers are going to need their own sustainable energy source. They're not going to be able to just suck. At some point, the politics of sucking off the utility and raising the cost of electricity for the entire county, so to just actually make this AI situation work. This beautiful fantasy land. There's like all these moving parts that no one's thinking of, and it reminds me of the 90s.
So what do you think?
So we buy SMR equity. If you believe Jensen's BS, if you believe his bullshit, then you should be buying infrastructure in AI. If you believe Larry Ellison,
you think he's full of shit? You think Jensen Huang is full of shit?
He is the greatest pump master in the history of all. He has
better than Michael Saylor.
He's great.
Better than these gold mining CEOs from Vancouver.
He destroyed human beings. Because remember, nobody talks about NVIDIA was 60-70% off, and the volume was like exploded, right? So because he pumped everybody up on the meta chips, he pumped everybody up on the crypto chips. Like if you go on his calls from 2000, right before the 2022 debacle, he couldn't have been more bullish on crypto chips and meta chips, and he mentions it 75 times on the calls. So, and he's signing tits essentially in this cycle. So he's a pump master. He's a great salesman, but he's a brilliant guy. And if you believe his bullshit, then don't get in the trade that every moron's in, right? The entire street has taken NVIDIA's price target from like, $60 a year ago to like now $140 or something like that. So in other words, the street's already raised the price target. The street, I've never in my career seen the entire street right on anything, right? They might be right for a month or two, but these are the biggest sheep. If you're an analyst in Westchester County and you're probably in through a divorce, your whole objective, you got the house, you got the private schools, your whole objective is to keep your job. That's why people need all-star charts, because the street is full of BS. It's full of people that will trade in herds, upgrade stocks on the highs, downgrade them on the lows, just like Micron. Got a downgrade today. This analyst at BNP, right? He upgrades this summer the stock. He raises the price target from 130, 140 to 150 this summer. This morning, all with a buy. This morning, he takes it down to a sell with a $65 price target. For the love of God. I mean, that should be illegal, shouldn't it?
Well, just as a reminder, folks, what Larry's alluding to, if you're wondering, what is Larry talking about? Why is he hating on Westchester County? Well, see, what happens is the sell side analyst community is dead. It died like 20 years ago. There's still a few folks that are trying to hang on for dear life. Doesn't mean they're bad people. I'm sure they love their kids. But Larry is what he's explaining is the priorities of those particular analysts are not to help investors. In fact, helping investors is probably one of the last things that they're trying to do. The only thing they're interested is keeping their job because,
Right.
of course, the lifestyle creep. You live in Westchester. You just got a divorce. You got little Timmy's private school. You got the Westchester Country Club fees. You're not even going because you don't have time and you're still dropping $2,000 a month. You're not even using the damn thing, right? Larry, you laugh because you know it's true. So if you're the analyst in, let's say, tech or whatever, right? And there are 30 Wall Street firms, which is amazing that there are still 30 Wall Street firms that cover stocks. Fascinating to me, but that's another story. Let's say there are 30 Wall Street firms and all 29 of them have a buy on it. And you're the one guy with the sell. You better be right. You fucking better be right. Or you know what? Little Timmy's private school, he's going to go to public school in the Bronx.
Here comes Tony Soprano.
That's right. Yeah, you're done, bro. You're done. So what's more important? Little Timmy's private school and the Westchester Country Club and, you know, making those alimony payments? What's more important, that or being right and actually helping your investors? Like, it's not even close. Investors don't even matter. Like, who gives a shit about my company's clients, right? Like, that's how they think. So that herd mentality is real, like very, very real. So what Larry's alluding to is just the way the world works. Some people might not like that. Some people might wish it wasn't like that, but it is. And guys like us can actually take advantage of that.
Right.
As they say, Larry, you know, you shouldn't kick someone when they're down. But actually, that's actually the best time to kick them, when they're actually down, right? So there are opportunities to make money by taking advantage of these conflicts of interest. And there's a lot of them. This is just one of them, right, Larry?
Yes. And so what we do at the Bear Trap Support, and we look at, you know, we always review like Hedge Eye, Jared Dillian, DirtNap, All-Star Charts. So there's like, we have some mentor partners that we observe. So we put our thought, but one of the things we love to do is measure the street and where they are, right? And so take Alcoa, for example. So in December, Alcoa had the highest percentage of sell ratings in like 6 or 7 years on the stock. And by March, the stock was 50% above those December fourth quarter levels. And so what we try to do is measure the capitulation, measure where the street is, and then we went back like 40 years with Alcoa. You take a look, JC, and I can show you this in Bloomberg behind me because we run a Bloomberg chat with hedge fund. Most of our clients are hedge funds, mutual funds, and pension funds. At the Bear Trap Support, we try to democratize information. But what we do is we look at, for our clients that don't have Bloomberg, we'll look last 40 years. Where was, when Alcoa was on the lows, where were the buy versus sell recommendations? And every single time, there have been 4 instances where the sells peaked at the lows on Alcoa, and each time the stock had 40, 50, 100%, 200% rallies off those lows. When the street was telling you to sell, that's when you buy.
Larry, what do you like out there? Here we are. It's September the 12th of 2024. Almost hitting the fourth quarter. Man, time flies. Do the years get faster as you get older, Larry? Because it seems like that to me.
Yes, for sure.
For sure, right? Man, just weeks are flying by these days. We're almost in the fourth quarter. I feel like this year just started. What do you like? What are you buying right here? What are you digging your heels in, and just let's go, back up the truck? What do you like?
Well, last year, and I think this year is going to be the same, we built a tax loss basket. And what I've noticed over the years is the tax loss capitulation puke climax. Years ago, in like the 70s and 80s, 90s, and even 2010s, the puke was always like, you know, maybe December 3rd, 4th. What I've noticed in our data, and we did this last year, we built a tax loss basket, and Alcoa was in there. Southwest Airlines was in there. We had a group of stocks. So we're looking for stocks that have this tax loss problem. And I think the peak is going to come this year early because there's a lot of stocks like the Nikes of the world. A Schlumberger is at the 200-week moving average, right? I love that. I mean, if you buy one thing, I was sitting in Omaha with Charlie Munger when we were I was putting together the book, and Charlie invited me out to Omaha, and they said, listen, he says, we don't invest this way exactly, but he says, one of the things that we have like 6 rules of thumbs. We look for great companies, right? That's rule number 1. And they look at obviously valuation. But he says, if you can buy great companies on the 200-week moving average, you're going to make money far more times than not.
Are you saying Charlie Munger, rest in peace, is a closet technician?
Oh yeah. Yeah. Well, what he says, it's in their basket of things, right? Because the 200-week moving average is such a level where, like, even Google in the recent weeks is trading, down, I think 20% off the highs. If you look, the 200-week moving average on Google, since they came public, was a super spectacular buy zone. It's not there yet, but it's actually pretty damn close. It's getting there. It's nowhere near. I think like a 30% drawdown would be on the 200-week moving average. So right now we want to accumulate, your Nikes, your Schlumbergers, your Microns. Like I said, the street, this BNP analyst on Micron raised the price target to 150, 160, 140, 150 in the summer, this past summer, and now the stock's 86. So we look for things like that. So we want to build a tax loss. It's a little early, right? But I think the peak will probably be October 15th or so.
I want to get back to the United States because I want to touch on what's coming. But when I talk to you, Larry, and I'm like, Larry, we're buying, Micron and Nike, we're talking about like American things. And I'm like, so what do you think about this market? And Larry whips out, well, there's this election in Peru, and I think it's going to have a real impact. And I'm like, really? Nobody I talk to talks about the elections in Peru, or whatever, So like, you got your ear to the ground in Latin America. Latin America, contrary to popular belief, outperformed the United States last year. The United States was an underperformer compared to Latin American equities. What do you like in Latin America? Is there a company, a stock out there that really stands out? I look at this new holdings, NU out of Brazil, that fintech company, like that regional bank situation. There are these Mexican airports. I mean, there's opportunities in Latin America. What stands out to you?
Well, first and foremost, what's important about Latin America is Chile, Peru, and Panama are like 40% of global copper production, right? Chile and Panama, this first quantum mine was such a productive mine because think about Panama. You're producing copper and you're like 5 miles from the ocean, maybe 10, because Panama is a very thin country and you can get that copper. And the copper in this first quantum mine that was just shut down for political. This is why we look at the politics. There was an election 3 or 4 years ago in Panama that went kind of toward the wrong direction politically, and people have rebelled and they shut down this mine. It was one of those productive copper mines in the world because the copper was near the surface of the earth, not too deep, and the copper itself wasn't 50 miles, 100 miles, 500 miles from the ocean, right? As it is in some parts of Africa. So the bottom line is this copper mine in Panama and this election. Now, the Panama just had an election in the last 2 months, and Molino, it's a very market-friendly type.
Do you vote? How does that work? Do you get a vote?
I'm not a voter, but I spend time in Panama. I'm from a Florida resident. But the point is that
you're the gringo spending money there.
I am, yeah. My mother-in-law's here, and we lived in New York 15 years, and so we're spending a little time here since COVID. But bottom line is, this election is positive. So I like First Quantum Equity, which has been destroyed. It's a copper miner. It's a Canadian company, but has tons of Latin American exposure. So it's First Quantum. It's in Canada, and that owns that mine in Panama, which we think they're going to close it down. They've already closed it, right? They've closed the mine. The previous government, the new government, we think will close the mine, but over 50 years, 50. In other words, they're going to open it to close it 50 years from now. That's a really big positive for First Quantum equity. Copper itself, because of this supply problem, and don't forget Chile and Peru. You brought up Peru. If you look at copper production in that part of the world, it's down year over year in terms, and politically stressed down, just like Panama. So this political stress on copper production. The copper itself's on the 200-week moving average this morning. That's another one's on the 200-week, and that's a screaming buy. So you want to buy copper. You want to buy the Vales of the world in Brazil. It's not a huge copper producer.
Copper hitting new 4-year lows relative to gold.
Yes. Oh, yeah. And that's when you want it. You want when that gold copper ratio gets to those extremes. Because what happens is, as the Fed goes in a hiking cycle, and we've been obviously in almost 2-year hiking cycle, it's now about to end. But what happens is copper and oil names get smoked because the growth element and inflation risk usually rises in that kind of period. So that spread between copper, and as you move toward rate cuts, that's where gold and silver really start to outperform copper. But over the next year, over the next 6 to 9 months, you want to be accumulating copper names. You want to be accumulating FCX, Tech Resources, TECK, that, and the COPX is a screaming buy. Remember, this is what we write about in the book, When Markets Speak, how to listen when markets speak. The U.S. power grid rebuild is a $2 trillion project. All the AI fantasies, all the crypto fantasies for energy are built on the U.S. power grid. It's going to take a ton of copper. And I think copper itself, you buy the copper commodity, you buy the copper miners. By the way, Barrick Gold now has, I think, doubled their copper production. So GOLD equity, there you get the love of the rate cuts, and which is supporting the Barrick Gold stock relative to the other copper miners. So those are kind of my favorite picks with exposure to Latin America in terms of mining.
Let's bring it back to the election, and we'll let you run, Larry. I know you're busy. I appreciate your time. We got the election in less than 2 months. Betting markets going back and forth. Kind of mixed results there. Number one, how do you think that this impacts equities in general? Does it come down, as somebody, I'm not really into politics, but what it seems to me, it's like the American voters are like, what do you hate more? Do you hate Trump more, or do you hate communism more? And that's the decision that people are trying to, battle through, and not an easy decision for a lot of people, right? So, number one, how close do you think I am on that second one? And again, how do you think that's going to impact equities?
You know what I tell my clients that hate Trump, and there's people that it's that the hatred from some of these clients is just spectacular. So it's kind of like in sports. Sometimes you make a bet. Say you love the Red Sox versus the Yankees, right? I used to have a friend that loved the Red Sox, versus the Yankees, but the Yankees in the 90s were just, a machine, right? And so he used to actually bet on the huge games. He would bet on the Yankees, emotional insurance, right? And so this election, if you hate Trump, geo equity, which is private prisons, right? Private prisons was destroyed yesterday. It's down 10% in one day. The Fannie preferreds were destroyed yesterday too. They're both great buys for a lot of different. I think some of the great value investors are looking at private prisons, but the fear is that private prisons are not going to be a great place with Kamala, right? But yesterday, First Solar was up 15%, TAN was up 8 or 9, whatever it was. So the solar names had the big juice yesterday, and the Trump trades, the GEOs and the Fannie preferreds, which is the Fannie preferred S's, the on the run big one, those got destroyed. So I'd start to with this Kamala bounce. I think the Trump trades have cheapened enough where if this race tightens in November, these things are going to be up 20, 30. Geo could be up 20, 30% by November if the race tightens.
So you think that the move here is to buy the dip in the Trump winning trades?
Yes, and I say if you hate Trump, it's great emotional insurance, right? Because literally, think of how much people hate Trump. if Trump wins, Geo probably is up 50%.
Yeah.
Okay.
And what about the banks? I know we're running late, but just quickly on the banks, we've been in the camp that the banks are the ones that are most tied to a Republican victory here. Do you agree with that at all?
Well, after Trump, the assassination attempt, that move in the XLF was spectacular. I just think Capital One here is a great short. I think that their subprime exposure. If you look at Dollar Tree stores, if you just listen to CEOs of Dollar Tree stores, Dollar General, they're basically telling you, they're not telling you verbally, they're telling you Capital One is a screaming, pounding the table short.
Yeah.
Yeah, because it's the biggest subprime lender in the United States. And so companies that they're exposed to middle-class Americans, which, these stocks have been destroyed. The Dollar Tree stores, Dollar General, there's like 50 of these companies that face the like Big Lots just filed bankruptcy.
Capital One looks pretty good. Larry, you're trying to short this thing, bro?
Yeah, I would short it there. I would short, buy a put spread, put it in the drawer. But that's the whole point, is because of rate cuts and the fact that Trump was doing great in the polls until 2 days ago. These financials made a spectacular move, and to some extent, here's a perfect example: the spread between J.P. Morgan and Capital One is at COVID levels. In other words, since the 22 high, I think it's 21, 22, Capital One's down 20%.
And why would you compare those two, out of curiosity?
Well, just on an HS, so you compare like the ratio of Capital One to J.P. Morgan is through the COVID lows. Now, all that means is people are afraid. People are hiding out in J.P. Morgan. I'm sorry, American Express. American Express, Capital One, or J.P. Say you can use either one, but call it American Express, right? That's the big prime lender. The spread between American Express and Capital One is through the COVID lows, and all that means is people are this encroaching subprime risk that's coming into Alley Equity, ALLY, down 20% this week. So all the companies that face these kind of middle class consumers, middle to lower class, are getting hammered, and Capital One's on the highs. That tells me Capital One's a short.
Huh. All right. Larry, listen, I always learn something new. You always bring some different perspective. I agree with some, I don't with others. That doesn't matter. It's all good. Larry, you're the man, bro. Everybody, show the book. Show the book one more time. Larry, everybody, get the book. How to Listen When Markets Speak.
And a quick funny story. I saw you in Toronto the next day. I always go, when I was at the Four Seasons, I bring a book down I always bring a book down to breakfast just in case I'm going to meet someone, right? And my kids make fun of me, it never works. So I'm sitting there at the Four Seasons. I look at the next table over. It's Arnold Schwarzenegger. It's great. So I gave him a signed book. We had a few laughs, and he was waiting for his kids. It was nice. But that was literally the morning after I saw you. But it was
Dude, I can only imagine Arnold Schwarzenegger shorting Capital One. Get down, go down. All right, Larry.
Thanks a lot, Larry.
Man.
Okay, guys.
Good hanging in Toronto.
God damn. That's the highlight of the trip right there. Meeting the governor. Damn.
Dude, can you listen, after hanging out with me, then you get to see Arnold Schwarzenegger. That's like almost as good, right? So can you imagine Arnold banging his laptop trying to short Capital One?
Wait, speaking of celebrities, did you see the Gronk thing from yesterday?
No.
Gronk was on Bloomberg in the middle of the day, and he made a comment and I'm gonna paraphrase here, but I hear the market's down. I want to get the stocks to go back up, and then that was the low of the day when he said that. So, dude, the power of Gronk.
That's actually pretty hilarious. I was showing my 1-year-olds. I have 1-year-old twins and twin boys, and I had on YouTube Gronk highlights of him spiking the football because I was teaching the kids how to spike the football.
Sure.
Dude, they loved it. They were fascinated. So they just walking around the house just spiking footballs.
Nice.
I know. It's good parenting right there, Spencer.
All right. 9:36. We are open. We've been open. Things are looking pretty good out there. From just a breadth perspective so far, more green than red on the screen. seem
Yeah, market's been open 7 minutes. We got the Dow futures up a whopping 41 points. S&Ps are flat. Nasdaq's flat. Bonds 30 years up down 1/3%.
technology the laggard of the day for the moment.
You got crude oil up 1.5%, copper up 1.5%, gold up over 1%, silver up 2%. The volatility index still under 18. Yeah, kind of muted action this morning. Yeah, not really that much happening. But
Communication.
what do you guys think of what Larry had to say? How about the American Express Capital One spread?
Yeah.
Would have loved to
know.
hear his take on the banks and the capital requirements.
So can you
explain
explain what that means, Strazza?
They're not allowed to do what they want with the money that they make.
Who?
Banks.
All banks.
More or less. Like there are floor limitations, but most regional banks are stuck following silly rules.
Wait, Strazza, I don't know if you saw the headline. Was it from the other day, yesterday, or the day before about the Basel III endgame?
It's been all the talk. All the
Yeah.
regulators are coming on the networks and talking about it. It's a really big deal right now.
Can you explain what a Basel III is as opposed to Basel par deux or?
So the headline that I saw, Steve, and you can correct me, was that so there's going to be these new regulations on banks, but I'm again from what I read, the new rules are not nearly as restrictive as they were going to be originally.
Yeah,
right. They've been watered down. So new capital requirements, but it could have been worse.
It's
right.
But it's less about Basel because I think that's like one of these supranational government organizations, right? That's like world rules. I think the Basel Committee. I'm not totally sure on this, but I'm pretty sure that governs like the world of finance. It's more about the Fed. The Fed needs to go back and roll back, just undo some of the Dodd-Frank shit, because these companies could pay much larger dividends and they could buy back shares and they could use their money to invest and grow their business. And they're not allowed to do that. And they haven't been allowed to do that for 15 years now. And if you look at the balance sheets of these companies, I mean, they could withstand anything. They could take another financial crisis and it'd be like a hiccup, right? So it's like we've created this safety net for them, which, as it turns out, is absolutely ridiculous to try to make it so that they could survive an event that maybe happens every 100 years or 50 years. Like it's just, it's kind of crazy. Just let them do business and grow. So I think we get there. It's all going to be about how good was it, right? They're going to reduce the regulations. They're going to ease the required cushions that they make these companies hold from a net capital requirement standpoint. Is it comes down to, do they ease it enough? And do they ease it for the right banks, right? Because they might start to segregate the lists of banks. The big guys have these rules, the little guys have these, right? So like, how do the community banks make out? How do the regionals make out? How do the super banks make out? What does that look like? I think, it won't happen for another 3 months. Yeah.
And are they punishing shareholders of banks?
Yeah.
Hold on.
Big way.
Are they punishing shareholders of banks just in spite because of what happened 15 years ago?
Yes.
Or are they holding them back because they don't want them to create another systemic risk situation?
This was it's both. It's both. I'm sure their intention's the latter, right? But this is what happens when regulations are made during a crisis. And they always seem to be made during a crisis. This is the most important financial regulation of the past 50 years by far, right? And it happened right as we were coming out of like this incredible event where the world almost came undone because of finance companies. So of course they overdid it, right? But now it's been 15 years. Look at these companies' balance sheets. Look at how they're doing. In fact, you're really hurting them. And like you said, JC, you're hurting the shareholders of these companies. It's like the oil and gas thing.
Because if it's not a systemic, because hold on, here's how I see it. If it's not a systemic risk, then let the shareholders make money or blow themselves up. Who cares, right? Like they're just shareholders. They're just people with money that are investing in the stock. If they lose it all, that's their problem. So
yes,
but we don't know whether or not there are systemic implications, which is the reason for these regulations, right?
The rules were made to almost assume, right, I think they're making the assumption that the little regionals could blow up first and then cause this big tidal wave that blows up the big guys, and then it all comes undone, right? It's a whole domino effect. If you study the financial crisis, you watch the movies, you get how this works. The counterparty risk, it flows through, it hits the next one, and then on and on and on. It gets worse every step it takes. What we learned last year in March, though, is that when these guys blow up and shit hits the fan, government's going to step in and save them anyway, and nothing bad's going to happen. So the government's going to snuff out that systemic risk a lot faster than it used to. Financial crisis took them months and months to act. It was literally the last second when they finally did the right thing. Silicon Valley Bank, there's rumors of a bank run, and then these guys are coming out, money's raining from the ceilings, right? Just shut them down, everything's fine. So if they're going to do that, do we need all these crazy requirements? They're socializing the banking system. Do they also need to bootstrap it to the point where they can't make any money? So it's just, we've done a lot for this industry group, and it's probably way too much.
I love it. I mean, listen, I mean, obviously these regulations, there's a reason why capitalism works. All of these regulations just make that more difficult, obviously, yes. Right?
But you get what I'm saying, right? March of last year, and then again in, May? There's not going to be systemic risk if they're going to step in and save the situation every time. So then let them blow up. Let them go to zero.
Yeah, because the implications are that the shareholders blow up, and who cares about shareholders? That's their problem. Yeah. It's about the cash balances and the people that are using the bank for actual services. Those people are not going to lose their money, which is what I think the regulations are interested in.
Right. That's how you stop the systemic risk. One bank goes away and disappears and their shareholders lose money. That's not a systemic issue. It happens every other day on Wall Street, right? Companies go to zero. That's okay. So in the case of Silicon Valley Bank, to be very clear, depositors did not lose money, right? That's very important. That's important. You can't lose faith in the American banking system. That's a big, bad no-no, right? So depositors didn't lose money. All the shareholders lost their money. That's good. That's how it should work. So if you're going to step in and do that and make sure there is really no systemic risk of these bank runs,
then what's the point in having the rules in the first place?
And let them go. Let it be the wild, wild west again for the banks. Let them go try and make money the way they used to. Banks, earlier on in my career, when I was in college, fuck tech stocks. Everybody wanted financials. These guys were making money in every which way.
And you grew up in Greenwich, so you really saw it.
Dude, 1990s, 2000s, financials. That's where all the profits were coming from in America. Tech stocks weren't making any money 20 years ago. Boy, has it changed. It's really changed. So, yeah, I keep ranting. I like financials.
It's actually, never mind. I had a silly analogy, but who cares? Well,
do we have Shawnee?
Yeah, we do.
Please bring him out.
Wait, actually, do we? Yeah, we do. Sorry. All right.
Shawnee baby.
I guess I hope he's ready. He's coming on.
I hope he's ready. Oh man,
it's cold. Oh,
here we go. I got you. Big game tonight. Hey,
I love what you said, Spencer. Another day at the office for us. No big deal.
Spencer said, "I hope he's ready." What if I had no shirt on?
This is a real.
I saw
this
you.
This is a real starter jacket.
I might tease the Bills up to 3 and ride with you tonight, Sean.
There was a great somebody had, I think I saw on Twitter yesterday, somebody had a picture of Don Shula and Marv Levy both in their old school starter jackets, and they were like, man, bring back the days of the NFL when everybody looked like this. It was pretty cool. I should have said it to you.
Coaches. Yeah.
Just call me Brian Cox.
Wow. Throwback. He played for the Jets later on, didn't he?
We try not to think about that. So did Jason Taylor, for that matter.
Yeah. Wow.
Yeah.
Hey, is Jason Taylor now an assistant coach for the Miami Hurricanes? I saw his big bald head.
Yeah, for a couple of years now.
Wow.
Doesn't his kid play college football right now somewhere?
I think so.
But he didn't go. He wasn't a Hurricane.
No, Miami, he went to Akron or one of these random schools. Yep. Yeah. Sean. We were talking about these tech stocks yesterday, and we were talking about the bull market coming to an end if Microsoft, NVIDIA, these semiconductors on a relative basis are all completing massive tops. That's front and center for me. How are you thinking about it?
I have to say that yesterday's trading action felt notable to me. I felt like the reversal that we put in yesterday and the way we finished in the highs, to me, that sent a message that it feels like the next path is higher, right? It feels like that's the path of least resistance. That seemed like a very big signal to me. I mean, yeah, you don't want to make too much out of one trading day, but come on, man, that candle yesterday in the S&P and the NASDAQ, I mean, that was a lot of talk about the engulfing candle yesterday. I mean, I don't know. It feels like the market wants higher, and tech stocks, I mean, of course, if the market's going to go higher, tech stocks are going to lead the way. They usually do, right? I'm definitely more willing to entertain bullish bets here in high beta names than I was, say, a week ago, for sure. Now, that said, and I've been saying this for a couple of weeks now, this doesn't feel like the kind of market that I want to be taking undefined risk. I'm an options trader, right? So I don't want to take undefined risk bets. I want to define my risks because things can change in a hurry right now. It feels like, even though, yes, I'm leaning more towards the market going higher, but I just don't want to do anything that has undefined risk. Like you and I were talking yesterday, you weren't talking about maybe want to selling some short puts or doing some risk reversals. Nothing wrong with any of those trades. This just doesn't feel like that environment for right now. That's all.
We're watching gold literally making new all-time highs as we speak.
Good. I'm in EQX. Well, I hope that takes it with it.
Yeah, man, this thing's up 6% this morning. It's going.
Yeah.
EQX looks a lot more like silver. Looks like a better silver, essentially.
It's had a rough start for me, but it's finally starting to move, it looks like.
And then how do you think about the volatility here? You know, we got the VIX at 18.5, up a little bit this morning. Like from an options perspective, from like an execution standpoint, like what are you trying to do? Are you trying to be long of options here? Or are you trying to put on spreads mostly?
I think that volatility is likely to continue coming in and head back into the high teens, mid-teens. I don't think selling premium here is the bet. I think if you want to make a directional bet, whether long or short, I think you want to be long premium because, again, defined risk. And if we are getting the turn and if the next leg is coming higher, this is a great time to position long with long premium. I mean, simple long calls. I put a simple long call trade on the other day. That's my favorite trade in the world. You guys hear me talk about that all the time. When a stock's making an all-time high and I could buy calls cheap, that's my favorite trade in the world. And I put one of those on this week. I may put more of those on, but I'm not looking to sell premium here. I mean, obviously there's always spots, you know, there's always little pockets where there's some premium to sell, but that's not where my head's at. I'm looking to position long premium, defined risk. That's where I'm at.
You know, I got Sean coming to me talking to me about buying bonds. That was his idea, by the way. We got people. Strazza's going to be like, that was my idea. Maybe, but the fact that those words came out of Sean's mouth is impressive in and of itself. Sean buying gold, natural gas. Right? Are you in the natty yet?
I'm in natty. Yep.
Look at this guy, bro. Look at this guy. I feel like I don't even know you. Before you know it, you'll be wearing Dolphins gear.
Yeah, I'm in bonds, gold, and natty. Yep. That's right. Even some old economy stocks, some Sherwin-Williams. I mean, come on.
Who's
that's
this
what's
guy?
Working. That's what's working.
All right. All right. Shall we hit it, Mr. Spencer?
Or recess?
I think we should. We got work to do.
Okay. Sure.
Where'd Strazza go?
Strazza, he's putting on hedging trades.
Oh, there he is.
They're already on, dude.
What are you hedging?
The market, my portfolio. I don't hedge.
You caught short yesterday?
No, I mean, we put on some puts earlier this week.
Did Gronk screw your short positions yesterday, midday?
You know, I was looking through the forum for what the hell happened at 11 o'clock. Because
I knew that not real money.
Oh, that was really funny. I'll talk about something I did yesterday. Throw up my Lamb research chart. I want to talk about trading. Something I'm going to talk more about in the future.
You want to talk trading and recess? What happened to you? Who is this guy?
Yeah, we like this stuff. So Lamb Research, this is like a forever leader in the semiconductor equipment space. We love this stock. Look, we entered back in 2023 when the primary trend had reversed higher, bought it for 500 something, right? Hit one target back at the prior cycle highs and then a second target at the 161.8. These fib levels aren't always perfect. A lot of times they don't get hit, but they give us a roadmap, right? They give us just a level of interest that we can act against. Lamb Research hits the second target. We're up almost 100% in the trade at this point, actually over 100%. And then it gaps back down below those pivot highs from earlier in 2024, back through the 161.8 out, right? We talked about in July how we were going to take profits more. We talked about this one on Hot Corner. We talked about Google too. We talked about taking profits in a lot of semiconductor and tech stocks. What that does is it gives you the power to reload. So yesterday I'm looking at this saying, wow, we're right back at these prior cycle highs. I think there's a good chance it doesn't hold, but why not take a shot? I already traded this one successfully. Now it's pulled back 35%, back to our risk level, our first profit target. You go right back to the well. You keep it really tight here. If we're back below 730, I'm going to be out. It'll be a small loss. If JC's thesis about XLK reclaiming its leadership position is real, I'm going to be so glad I bought this one here. So take profits when it makes sense. Feed the ducks, protect yourself, right? Basically refresh your dry powder a little bit. Then you could redeploy that capital in better ways in the future.
Fun fact.
What?
Consumer discretionaries here pushing up against new multi-month highs relative to S&Ps. So for one of the worst places in the world, doesn't seem like that terrible.
Boy, anyone else loving that quill pen in the Strazza letter logo? That's pretty snazzy.
Yeah, it is pretty snazzy. Who did that? That wasn't Strazza. Who was that? Was that Izzy?
That wasn't Brett either. That was the Studio Boys.
Was that Izzy? That may have been Izzy.
All right, shout out Izzy.
We get to hang out with Izzy next week. I'm pretty excited about that.
Is he coming though? I don't know.
He's coming to Chicago with us.
Nice.
Is Giancarlo coming?
Nope.
Is he okay?
Yeah.
Okay.
All good.
Is he okay?
Okay.
All right. So, okay, let's get to some real business here. What's everybody eating tonight during the game?
That's a great question. I'm going like hardcore keto. I'm actually fasting since last night. It's a strange thing for me. So I would love to like pound some chicken wings or something.
Did
nice
he
like
just
that.
say I'm fasting since last night? It's fucking
so like,
9 o'clock in the morning.
So I didn't do dinner and I'm not doing breakfast.
Oh, I skipped them.
I got pork belly on deck though. I'm about to go to town, but I have to wait another 2 hours.
This is why he's so cranky this morning. Okay. All right.
Watch
Get this guy a croqueta or something.
All right. Well, Bills fans will love this. Having a little pizza tonight, making some beef on Weck sandwiches. Bills people know what I'm talking about.
On what sandwiches?
Beef on Weck, Kimmelweck rolls. You can't get those in too many places outside of Buffalo.
Okay, so that's like your special local roll.
Yeah, pretty
Spencer's got a bunch of places like that. You're probably a big ambrosia guy, Spencer.
I don't know what we're talking about right now.
Spencer, you can't get a Kimmelweck roll in New Jersey? I'll bet you can.
We're talking about bread, dog.
I'm sure.
Is this like a
bread
Polish
game is not strong.
Is this like a Polish thing there,
No.
Shawnee?
Not a Polish thing, no.
They got a lot of Polish things up there.
Oh, pierogies are huge in Buffalo. Yeah, that's a big thing. And
kielbasa, pierogies and kielbasa.
I'm bearish.
I'm into it. I really like the pierogies and the kielbasa. I got no Polish in me, but I'm into it.
They're like fat.
Shout out Zloty. I will be eating ribeyes.
Yeah.
You know, I just want to, I've been having some conversations, you know, with wine people lately, and, you know, it's all about Brunello and it's all about Burgundy, and that's all anybody wants, Brunello and Burgundy. And for the record, there's nothing wrong with Brunello or Burgundy. Big fan myself, but let's not forget about Bordeaux. If this was 2, 3, 4 years ago, it'd be all about the Bordeaux. Now, everybody forgot about it. I got to tell you, every time I have a ribeye and I don't order a Bordeaux, particularly from the left bank, I regret it every single time. and I'm easily, influential. Like they come to me, I talk to the sommelier, they're like, oh, but the Syrah, try the Syrah. All right, I'll try the Syrah. Disappointed. Oh, but JC, the Barolo, get the Barolo with the ribeye. Disappointed every single time. For the record, I love Syrah and Barolo, but when I have a ribeye, I want a left bank Bordeaux from the Medoc, Saint Julien, any of those, Margaux. Anytime I veer from that strategy, I regret it every time. It's like selling naked calls. Just don't do it. Go with the Bordeaux.
You might be the only person I've ever known who talks about fancy wines for drinking during a football game. I don't think I've ever heard this, ever.
What's so fancy about Bordeaux?
Drink a Budweiser.
Nothing. It's just football is beer, man. It's not a wine thing.
Well,
nobody drinks wine at a tailgate.
First of all, the rest of the world is not from Buffalo. Some of us have actual class, right? So I don't know what these Buffalonians are doing. There are other beverages outside of beer.
Sean, I have to correct you. We went to almost every Giants home game growing up, and my grandpa always brought the wine. They would just sit in the parking lot and drink the wine.
Italian folks.
Yeah, couldn't help themselves.
That sounds like an Italian thing more than anything else. But...
Well, welcome to the Meadowlands. That's exactly
but us Cubans, many of us are from Spain, and the Spanish and the Italians, and the Greeks for that matter, they ain't that different.
No, too similar. You drive me crazy.
All right. Well, what do you guys think the over-under is on percentage of Bills fans in the stadium tonight? I'm going to guess 40% Bills fans in the stadium tonight.
And that's why, so Miami's getting the spread, and it's moving in their direction, right? So if you can get the Bills +3 in this game, it should be really close.
I mean, it's basically
you're getting it +1.
Whenever the Bills come to town, it's basically like a neutral site game.
I just looked.
2.5 on Hard Rock right now. So if I could tease that up to 3, come on, is that not the move? It's going to be a dogfight. I'm looking forward to the game tonight.
All right, what's the over/under on a Josh Allen hurdle tonight?
Oh, I hope he does it. I love Josh. He's so fun to watch.
I hope he does. They're going to clock him so hard he's not coming back till week 7.
But is the defense
I dare him to do something so stupid as to leave the ground in the air. And granted, he's from Buffalo. People do dumb things in Buffalo. If he does that, he deserves whatever he has. I don't wish poorly upon anybody. I don't want anybody getting hurt. But if he does that, he's literally signing up to get hurt.
Strazza, you ever notice how when JC shit talks in sports, he puts down the fans and he says nasty things about people. He doesn't just talk about sports.
Sean, even you have to admit, Buffalo fans, if they're known for one thing, it is leaving the floor, flying through the air. Right, that's what they're known for.
Yeah,
like the air.
Boys
down.
All these people from Buffalo think that they're in the WWE.
Yeah, listen, Sean. This man is surrounded by Eagles fans. So at this point, he's broken, right? Like NFL fans have completely broken him. He lives in a neighborhood with Eagles fans.
No, there's gators there's gators in my neighborhood, believe it or not.
Yes.
It's gotta be tough for
gators. We got some Eagles fans. We got Jets fans across the street, so they're easy to make fun of.
You gotta move.
What am I gonna do?
I live in a town of about 2,000 people, and there are 4 other households that I notice on game days that they have Bills flags out their house, which is cool. I haven't seen a Dolphins flag yet, but I've seen 4 households that have Bills flags. Just saying.
All right.
Yeah, you drink the wine, you drink the wine more or less out of a rocks glass. Stock market, Mike. That's how. No stems. No stems.
Peter Segura asking if I have a Bildo. Nice. I don't.
Hopefully, if you do, it's made by Shark Ninja.
This was going to be my recess. There was a spacewalk overnight.
Pitch and roller 3, yaw is a 2.
Spacewalk. This guy is also the CEO of
single-handed operations are fine.
Yeah, the ticker is
static and with dynamic disturbance.
I don't know.
Does the guy actually
left hand?
No. So this is about as far as he got outside. But
pretty cool.
Pretty cool and terrifying. I thought this was interesting.
What did he pay for that experience?
I don't know. A lot.
Up, down, left, and right are 3s, maybe a 2.
Yeah, that's about as far as he got.
So this guy's the CEO of Shift 4 Payments. His chief of staff actually lives in my neighborhood.
Is he the one who made?
He's got a great basement setup, actually.
One of these billionaires, from what I understand, made the Space Boy uniforms that they're gonna like wear up there, which is like a big deal. It's like crazier than scuba gear, and he's gonna be the first to do something. Is that him?
He's a super young guy. He's not old at all.
The guy, one of the guys owns the company that makes like the stuff they have to wear up in space to like be safe or whatever. And he's supposed to be the first to like actually walk on something.
They have a payments company. Like there's a few guys in my neighborhood that work for this guy. Actually, I know way more about this company than I ever realized that I would know. Random. Yeah, Shift 4. It's like a $6 billion company.
Yeah.
Yeah, but this guy's not old. Like usually it's these old guys that are like fulfilling childhood dreams and stuff like that. This guy's super young.
No, this is just rich guys who are bored.
Yeah, but what I'm saying is he's not like one of the old rich guys that are bored. Like he's still like really young. Is all I'm saying.
What do you think? They're gonna like go to Mars and live forever?
Yeah.
Oh, this is
Get the best healthcare. Get all the best healthcare up in Mars. What's wrong with these people?
I don't know.
JC, make sure somebody gives the cheetah a ride to the stadium tonight. All right.
Oh, hey now. All right. On that note, we're done here. What do we got going on today? It's Thursday. We got the jam session at noon. We got Trap Request Live at 1, and we got our special 4 o'clock State of the Markets live stream. I will put the link in the chat one more time, but it is at the very top of the description on YouTube. There it is in chat. We'll see you guys there. Thanks, Larry McDonald. Go make some money. Have a good one.
Bye.
JC's mad. You made him mad.
Wow.
I can't take no loss. I don't need no